Welcome to Mac and Bleu, the cutting-edge podcast for the nation's builders, merging the realms of construction with exciting advancements in technology. Join us on a thrilling journey where we delve into the dynamic world of blockchain, AI, the metaverse, virtual and augmented reality, and their transformative impact on the industry. Our engaging discussions span a wide spectrum, covering not only construction, economic development, supply chain, and market segments, but also exploring the vibrant tapestry of diversity within the construction landscape. We shed light on the intersection of local politics and its profound influence on the construction sector, while championing the remarkable contributions of women and minorities in construction. For all things Mac and Bleu, head to www.macandbleu.com, and don't forget to subscribe on YouTube. I'm your host, JJ Levinsky. Now let's get into it. Hi everyone, welcome to another episode of Mac and Bleu. I'm your host, JJ Levinsky, CEO and co-founder of Blue Wave General Contracting. I'm lucky enough to have Chris Duncan on. Chris is a partner. He's more than a partner. He's some sort of fancy C-suite guy at Farmer Woods Group. He's in the insurance business, and no,
don't judge me.
Don't judge him. Just like we've had attorneys on, so don't group them in the bottom of the ocean together just yet. Welcome, Chris.
Thank you for having me. Excited to be here.
I have known who I think Billy introduced us.
Billy introduced us. Yep.
Yeah, Billy, if you're watching or listening, we won't hold it against you. A mutual friend of ours, but we probably met a couple years ago. And what I've enjoyed about watching Chris in the industry is the word agnostic comes to mind, but just how connected he is in relation to how we operate in the AEC space and how you are in the insurance space. So with that, before we get into all the geeky work stuff, tell everyone a little bit about, like, are you a native, family, kids, all that fun, and what you do for fun other than work, all that stuff. So
absolutely. Yeah. So native Phoenician, born and raised here, grew up in Ahwatukee down in the Southeast Valley. Well connected here in the Valley, I think. And I haven't moved more than about 6 miles from where I grew up. Not going to move, like being down in the Southeast Valley. 2 kids that I'm just incredibly proud of.
Are they yours?
I think so. I hope so. My daughter, unfortunately, looks just like me. She's a spitting image, so poor girl. But yeah, 10-year-old daughter, plays piano and dances and just wonderful. My son, big athlete, loves to play football and soccer. He's 8 years old.
So you guys do a lot of chasing.
Do you have
a minivan?
My wife has an SUV, and I joke that she drives Uber every night from 6 to 9 p.m. as she shuffles the kids around every night. My wife is a stay-at-home mom and is just the best mom in the world. It's pretty cool. It's
That's
really cool
awesome.
to watch. Yeah.
But you were no slouch at ASU.
So
you weren't on the Tommy Boy plan, and you didn't have the.
I did take a victory lap.
Okay.
I absolutely was a slouch at ASU compared to my friends. One of my best pals runs a big company here in town, and he graduated number 1 in our class, and I graduated somewhere near the bottom-ish. But wonderful program. Went through the construction management program at ASU. Had a ton of fun. Was in a fraternity. Was on a couple sports teams. And really, really enjoyed my time at ASU. Maybe too much sometimes.
All right, so the $4 million question. What the hell were you thinking when you got out of construction management? You didn't go right into insurance. So give us the whole journey.
Yeah, no, and I think it's really, really good for where I am today. But graduated from ASU with my degree in construction management, knew a bunch of rich contractors and thought, this is an easy job. I want to go be a contractor and make all this money these guys driving fancy pickup trucks. Seemed simple to me, and really, really liked it. I started my own company called DC Building Group right out of college, and took on a couple projects, did a couple things, and got to learn with my checkbook all the things that I didn't know that they don't teach you in college about being in the general contracting business. And then was hired by a guy named Charlie Spencer at SCM Builders. We built Walgreens stores. Really, I would say my first true mentor in the workspace.
And what give us a time frame? What year was that?
This would have been maybe 08-ish.
Okay.
I graduated college, maybe 2009, 2010, somewhere in there.
So pre-recession though, or right in the recession. Right in the recession.
So yeah, and ultimately, Charlie taught me everything he could, and I got to do every job in that company as he was winding down that company, just due to economic downturn. And had an opportunity to meet with Jim Farmer, my now partner, over at Farmer Woods Group one day, and I needed a new job just because Charlie was out of cash, and he was going to shut her down pretty quick.
Yeah.
And he said, "Why don't you come sell insurance?" And I said, "I have no interest in selling insurance." And he said, "Well, come give it 90 days. I think you might think twice about it." And I gave it 90 days, and that was 12 years ago this October.
So I have to do my job. What happened in the 90 days?
I didn't have internet at home at the time, and I was searching for a job on monster.com. And yeah.
I'm sorry. On this case, I am laughing at you, not with
totally,
you.
Totally. Yeah.
Why isn't my resume going through?
Yeah. I was, I was working part-time for Charlie at SEM, and just, I was like, God, I gotta do something. I don't think I can sell insurance. And had a couple really cool opportunities. Had a guy JJ Green Builders. And I'm drawing a blank on his name at the moment. I'll come up with it.
Okay.
He took a chance on me and let me sell him insurance. And I drove to Cave Creek 15 times to sell a $6,000 policy that ultimately, I lost money by the time I did the math on the gas. But I thought, this is a cool job. I get to be a part of his business. John Ludich was his name. Excuse me. John Ludich, my very first client. And he took a chance on me. And I get to be an integral part of his business and this thing that mattered so much to him. And he took a chance on me. And I got my butt kicked on that policy. And that was rough. But my next deal made a bunch of money on. And it was like, oh, I can do that job. And stuck around. And it was...
So early on, was it... what kind of lines were you selling? Anything?
Was
it business?
So we are all, my focus, 100% commercial focused.
Got it. There's no residential.
Yeah, we have a personal lines department in our office, but I've never focused on it.
Got it.
And so
I just wanted to qualify that for the audience sake. Yeah,
absolutely. So when I started, it was focused. I didn't know what I was doing. I truly didn't.
Well, none of us did.
Right. But I had a rad team behind me of people that just counted on me to go out and open up doors and bring stuff in, and they show me the way. Jim Farmer, who became my second work mentor, in my life, and we have a saying in our office is we've got pay time and non-pay time, and pay time is 8 to 4:30 every day when we're producing. Non-pay time is before and after. And Jim would get there every day at 6 o'clock and give me non-pay time, and I'd get his brain for free and I'd get his time for free from 6 to 8 every day, and taught me a ton. And we went out and got some deals done together, and it was really, really cool. Really, really cool.
So what? Let's dive into kind of the meat of work. What do you think the biggest misconception of the audience would be as far as what you do and what's out there in the world, and what you're faced every day with, as far as when you're representing customers and clients and people not understanding commercial lines of insurance?
Yeah. I think more often than not, our business is reduced down to commoditization. So it's get the cheapest thing that we can get and get us on the job and get us paid. For us, we are in what I truly say is we're in the trust business. So when we are out finding good clients, finding people that we want to work with, we need we want and need long-term relationships built on trust that this is, in most cases, your largest asset, and it deserves the right protection. It deserves the right conversations. And we are going to have, one of our core values is courageous conversations. Sometimes I'm going to have courageous conversations with my clients and tell them, hey, you're doing this wrong, and here is your exposure, and you need to pay attention to this. We ultimately may ask you to spend more money on things that we find are opportunities for losses, but it comes down to trust. If you trust me, we want to make sure that we have a long-term relationship, that cost matters-ish until there's a claim, and then we want to make sure we have the right program in place.
So you brought up the commoditization. How do you? Let's face it. Pretty much everyone is faced with some form of that in their respective business. How? Okay, it's one thing to talk all utopian like you do, Chris, but how do you overcome those things? I mean, what are some tools in the toolbox?
Yeah, I mean, are you asking for some sales skills?
Sure. Well, the audience wants to know. It's like, okay, well, what makes you special, Chris?
Yeah. No, I think so. It's a handful of things, right? It's relationship based in that we've got really, really great clients that are long-term clients that have given us the latitude to build them programs, and and they trust us implicitly in their risk management profile. And so if you take that idea and them talking about that to the audience at large, right? So whomever's going to listen to them, they go, hey, Chris is my guy. I've got a really great big client here in town. And he goes, I don't even know the name of your company. I just know that if it's insurance related, I call Chris. And that's interesting to me, right? Like that's, they're a $100 million contractor and just become their guy, right? But it's the commoditization happens based on misunderstandings. And this is the same everywhere you go. And the piece of paper you rent every year could potentially be the same, but it's who do you want to call on that when that black swan event happens and you've got a major catastrophe on your hands, and is the person you bought from the person you want to talk to when that happens. And if you don't, if you don't love them, they don't love you, and they don't know your business, and you don't really trust them, that's a tougher conversation than if it's somebody that you just go, yeah, Chris is going to do whatever it takes, or whomever, right? Probably no different than when one of your owners calls you and you got a problem, you just take care of it.
Yeah, you do.
You step up and you put the bandwidth towards the problem, and you figure it out, and you bring the resources in, and you just take care of it.
Are there any other, everyone talks about that build. I mean, you've talked about it already, but that building trust and even some empathy to a certain degree is, what do you find? What's a consistent underlying theme there? I mean, other than selling Chris, because you're the brand. Yep. Let's be honest, all of us have to be the brands in some capacity of your larger brand, but the personal brand always starts at that. But what are other things that always seem to come up that cements that trust? Can you pinpoint anything?
Yeah, I think it's in the acquisition of new clients. Oftentimes, it is paying attention to what people are saying and not just waiting for your turn to talk.
Okay.
And so
it's a novel approach.
Yeah. It's less about sales in my mind and more about just listening to what moves the needle and getting all of the parties involved. And so many things get lost in translation around emails between 10 different people. And now you get this email string that nothing makes sense. Like, let's just pick up the phone and clean things up and figure out what a perfect relationship looks like. And can we do that? Can we have a perfect relationship? If not, what things can we not do? What things can we do? What things are we great at? Where do we need to work? What is that opportunity? So I always go back to trust in that, do you trust me? And if you do, then we can move forward. If you don't, then we need to figure out how to regain that trust, how to build that trust, or to transition you out, because I don't want you to have to wonder if we're doing the right thing for you, every day.
Fair enough. The in the pre-work that we had done, if I can almost read my script here, it's like you've mentioned the concept of, quote, marketing versus bidding when it comes to insurance programs. What does that mean to you, and how do you parlay that to the audience?
Yeah, we do a ton of work with contractors, and you guys are bidding work every day against your
fellow contractor.
And so you're just used to this world of turning in a hard number and bidding insurance. And in the world that we are in, the carriers are exclusive. So once I turn in your paperwork, another broker can't go get that quote from that person.
Yeah.
And so what you've got is you may be in a situation where you've let the way that you've bid your insurance, you let that dictate an insurance company deciding who you're working with, versus choosing your broker, giving your broker access to the entire marketplace and letting them market you effectively the way you want to be marketed, telling your story the way you want it told into the marketplace as a whole.
Got it.
So it's our job to do your bidding. We're the GC, right? And we're going to our subs and grabbing all the quotes.
Which are the carriers.
Yep. And bringing them to you so that you can make a decision that I want to go with XYZ company for these reasons. And, we become your GC.
How have you and your firm, if you had to break it down into, just give some rough percentages of who you, general contracting versus trade contractors or even vendors, what does your portfolio look like?
So we are, as a whole, we're a 90% commercial lines shop.
Got it.
I would say that our subcontractors certainly pay the most amount of insurance, just because they bear the biggest risks on any job. So from a from a premium perspective, I'd say that subcontractors by far and away lead the amount of insurance we sell. But from a number perspective, I'd say we're probably, pretty close to 50-50 on GCs versus subcontractors.
And is your firm only in the construction space?
No, we are again, it's Arizona.
Yeah.
So construction runs everything.
Yeah.
We live and die by construction here.
Right.
But our book is largely construction. We do a ton of manufacturing. We do a ton of real estate.
That's what I wanted.
A ton of even in my book specifically, I say it's construction or construction adjacent. We're manufacturing construction materials, or we're installing construction materials, or we're contractors, or something along those lines. It's all adjacent to it.
So here's one I'm trying to put on the hat of the audience. Like I'm thinking about maybe I'm a smaller trade contractor, or even a smaller GC that's out there, and they struggle with insurance. And I think one of the misnomers is I come to a broker like you. You don't have to go to one carrier for all your lines. Are you seeing more, like in your world that you're shopping for us, just like everyone wants us to shop for them? Are you finding different alliances with the different carriers within specific lines and sectors? So you run comp here, you run GL here, you run whatever, E&O over here, you run, all the different lines. Yeah. I'm just curious, what's it like in your world?
Totally. Great question. It's actually a really, really good question. So we take the approach that we are either going to bundle or unbundle as it's best for the client.
So getting back to knowing them first.
Yeah. So it's what are the risk factors that exist in your business that would make us bundle or unbundle something. So if you are you can give examples.
Yeah,
a residential window installer. That's a really tough thing to insure, as you can imagine, versus a GC that's building commercial buildings.
Yeah.
We might bundle a GC, we might unbundle a residential window contractor, just depending on what the appetite in the marketplace is. And where we are today, the appetite continues to change so rapidly because of downward pressure from economic pressures and things that happen. The carriers are all changing their mind on what they used to like and what they're going to like today. The single biggest thing that we can control, that we can help our clients control, is work comp. And that line of business. We've got wonderful carriers that allow us a ton of leeway to build programs, to build loss control programs, and to build claim control programs and things like that. So that's where we're finding that we are unbundling that more and more.
Yeah.
Because work comp carriers are specific in what they do.
Yeah.
And they're really good at it.
Well, and I think that was where I was trying to get you to, is because even sometimes I feel like I've been in the business a long time, but I'm humbled how much the carrier business changes year to year, and going, I remember when it was bundle or take it or leave it on a bundle.
Yeah.
And now it seems like everything's got different tethers to different specialties. And quite honestly, it seems, at least in my situation, it seems like the alliance is actually somewhat stronger, so that your comp is so focused that they really understand it, or GL or whatever, or like professional liability if you're doing design build, things like that. So I guess I've kind of been humbled by it a little bit on the specialty side lately.
Yeah, totally. And I think too, like every industry today, we have a lack of talent, right? And so to find an awesome claims person for work comp, or an underwriter for work comp, or claims person for auto, we are seeing much more specialization in every world, where you used to be able to be a jack of all trades, and now there are the laws are hyper specific, the losses are bigger, everything is changing. So we have to have a ton of specialization in every line of coverage.
How has there isn't an episode that we don't do talking about, you brought it up, talent, human capital. We just don't have enough people to do. Fortunately, we just don't have enough people to do what we need to do to largely effectuate all the work that needs to be done here in the Valley and as Arizona grows. What I'm curious is to get through your eyes and your industry eyes is, how does that transfer to risk in the companies that you that you represent? So in other words, let's role play here. Hi, I'm a new GC, Chris, and I want you to be my broker. And as you peel the onion back and look at me, what are my biggest risk factors now, based on just the compression of human capital, that are different than maybe 5 years ago?
Yeah.
Is that a fair question?
I want to go back even further, though. I think that for us, I identified years ago that we have a blue collar problem.
Okay.
People don't want to be plumbers today. They don't want to be framers. They don't want to do these things because there's quote unquote cooler jobs available that are, sitting behind a desk and doing cool podcasts, right? I mean, this is.
But you don't have to go into 6-figure debt and.
Yeah, no, I mean, this is more fun than digging a ditch every day.
It is.
And so, but it's bled over into, I would consider our world in the insurance world very white collar, right? And insurance is not a sexy job, but neither is real estate. I mean, there's a lot of things that are great jobs that pay well that we can't get people to show up for,
right?
Because I don't know what they're doing, and so the bleed down effect is that the carriers have less people, so they are working on less risks. And then when we come and look at a young GC today, well, who are you hiring? Well, you've got all these great relationships with guys like Bill and these other great subcontractors. Well, they won't even return the phone call of a young GC that's never had a job before, that they've never done a job for, because they don't have the bandwidth, because they don't have enough people. So now these young GCs are dealing with young companies, with younger people that, again, they may be great at their job, but they've just got no history to show how great they are. So the risk is incredible for these younger, brand new GCs or these younger, brand new subcontractors. The risk is gigantic on those first few years until we get some, people, if you've ever shopped your insurance, you've been asked for loss runs and they go, I've never had any losses. If I had $1 for every time somebody told me they've never had any losses, well, except for that one guy, and insurance company screwed me on that one.
Yeah.
And so but those are, it's like we see that grow up, and all of a sudden it's like young companies that are in hyper growth mode, or they're just young companies. We have these losses and they're afraid of them. And then you grow and you're like, hey, this is part of the job. We're going to have losses. We just need to manage them on the back end, manage them appropriately. And how do we, get better from them?
There comes a time when dreams become a reality, when you see your vision materialize into a true work of art. And the only way to get there is to choose a general contractor who shares that same vision and knows how to bring it to life. At Blue Wave, we aren't so big that we've forgotten where we've come from, and we aren't so small that we can't care for your projects regardless of their size. When your vision deserves safety, perfection, timeliness, and expertise in order to become a reality, trust Blue Wave to get it done right the first time.
So,
okay, so let's spin that. Let's say I'm in the audience right now listening or watching, and they say, all right, Chris, you just described me to a T.
Yeah.
What can I do over the next year to make me more marketable to better carriers?
Absolutely. It's great. Yeah. So we have 3 ways to manage risk.
Okay, go ahead.
Risk management, risk retention, or risk mitigation. Okay. So if we can mitigate it to somebody else, if you're a GC and you can push off your risk contractually to a subcontractor for the risk that they bring onto the job site, we want to mitigate as much risk as we can.
Okay. Fair enough.
The stuff that we cannot get rid of, we have to manage. So let's put great policies and procedures in place on how we manage our work sites, how we manage the people around us, how we manage our employees. And then at the end of the day, we have to decide what level of risk we're willing to retain, and that's a risk retention. And we go, okay, our deductibles are X. We need to have this much cash on hand, or we know that this is a more dangerous piece. Add more risk management to it because we cannot get rid of it. We cannot manage around it. We cannot eliminate it. And so we have to manage around it. And so it's really taking a good look at what work are you doing? Not everybody's going to go build a Blue Lagoon today, right? I mean, that's not a first day job.
Yeah.
First day job might be building a yogurt shop
and
identifying the risks that exist in there and just being realistic with yourselves in.
No, go ahead.
We got to do the job, right? Let's do it the best way we know how so that we're alive tomorrow, and, to live to fight another day and grow.
So let's go down a couple, just because, again, I want to give stories and examples. Let's go down the mitigation thing. Let's explore some things. Most companies all have some sort of fleet or vehicle or auto policies, in which we don't need to go into the granular level of that. What are the biggest mistakes you see, or what are your best companies that you represent? What are they doing in fleet / auto / whatever? Gosh, give me some examples.
The biggest needle mover we're seeing today, let's start with the biggest loss trend that we're seeing today is rear end incidents, people on their cell phones. It's happening everywhere. People are
still?
100%.
Really?
Daily.
Okay.
Daily.
I guess I'm naive to that.
Yeah. People on their cell phones.
I thought it kind of gone through that cycle of everyone, the societal guilt that everyone had put on each other, and all the stickers on the back of we have a no cell phone policy while driving.
Those are big companies.
Okay.
Those big companies have resources to deploy to say that your job matters here, and if you want to keep it, and we see it on your cell phone, you're fired.
Okay.
And that's a grown up thing to do, right? We're talking about little companies here that have 3 trucks on the road, and it's you and 2 of your buddies that you talked into quitting your job to come work for you, and that's just the way these things start. And these cell phone policies, and you are the estimator. When you're a new company, you're the estimator, you're the sales guy, you're the chief engineer, you're everything.
Custodian, everything.
Yeah, you're everything. And so your phone's blowing up all day. And so that's the biggest thing we see. So it's putting plans in place. It's putting risk management strategies in place from the beginning, and making sure that you follow them so that they become part of your culture as you grow, because the cost when you go from 10 trucks to 20 trucks, or you go from 2 trucks to 10 trucks, and the cost is now 10 times what it used to be. So every accident, every incident, every mistake costs a lot more. The mistakes cost a ton. And so that's where we have to manage it on the front end, and we have to put good policies in place. But I understand the job has to get done.
Yeah.
And so as we sit with new clients, new businesses, or established businesses that have gone through loss issues, we spend some time going, hey, does the money matter now more, or does the production matter more? And we have clients that say, listen, I can't, another big one's putting cameras in the car. My guys don't want them. Okay, well then we need to be prepared that we're going to have losses that occur that are undefendable for you.
Okay, let me interrupt you. What are the steps there? Because you have nothing, you have GPS trackers, and now the tracking's probably number 2.
Yeah.
Cameras is 3. Is there even a more nirvana state than that?
Probably not. Not that exists
did
today.
I capture that kind of?
Yeah, and the biggest problem is that everybody go, hey, we have GPS tracking. Who's watching it? Well, it's my job. Well, when do you look at it? Well, maybe once a month, or when there's an accident. But that doesn't tell us anything. So it needs to be real-time tracking and real-time
So
disciplinary action.
Are you seeing some good companies that do the reporting in that middle stage?
We are seeing a ton of effort being made for hard stops, which again, go back to on your cell phone.
Okay.
If hard braking is a big one, hard accelerations are another one where people aren't paying attention at a stoplight and they're taking off from stoplights. So you can identify trends that exist. There are companies with algorithms that are way smarter than me and way smarter than anybody in the insurance industry that can identify actual changes and then put together, specific risk management.
Okay.
The camera thing becomes a whole different program, that when we have an accident, we now have data and we now have proof of what really happened. And it's never he said, she said. It is, here's what happened. We're at fault, or we're not, or we're comparative negligence, or something along those lines. And so we're pushing hard for people to move into, cameras on job sites, cameras in their trucks. Do everything you can to protect yourself. Comes down back to risk mitigation. Let's push off as much as we can, if we can, and that'll ultimately drive insurance rates lower into the future and just protection into the future.
Well, and thank you, because that was good that we got a little granular with the vehicle thing. Now let's switch over to, we'd be remiss if we didn't talk about the safety, the ergonomics, and the work, as it relates to work comp.
Yeah.
Okay, so let's unravel this one petal of the onion at a time here. Safety first. Okay, I'm sure you come into some companies, great safety programs, other ones don't have anything, and then there's the in-betweeners. What do you guys have? Do you or the carriers have a hard stance on that? And then how does it, so think about that as number 1. Number 2, though, is when the ones that you need to work on, what are the new strategies in that? Because just having a safety manual and doing the check the box stuff doesn't work. We all know that. So as a broker and your strategic partners, how are you guys more active in the safety component of your clients?
Totally.
Hopefully I didn't sit you for too much there.
That was a big question. It's a great question.
You can manage it though.
Yeah, I'll manage through it a bit at a time. So,
okay.
We have a saying, and really it came from my old man. He always used to say I was more lucky than I was good. And so I've always been pretty lucky.
I think I got the matching tattoo.
Yeah. But we have a lot of clients, and we ask them, and it's a question that I ask people up front: are you lucky or are you good? And there's a lot of people that are just lucky, waiting on a loss to happen. And so when we go in and they go, well, I've got a safety manual. What are we doing to make sure that it's being adhered to? Do we have a safety and compliance director? What are the things in there, and did you get it off the shelf, or is it specific to your trade? Is it specific to your manufacturing facility? What is it, and what things can we do better? Then we dive into trending analysis. So what do the losses look like, and where are they coming from, and what do we need to change inside? Is it people cutting their hands? Is it people falling in holes? What is it that's driving losses, and what's driving expenses? Then it's easy for us to go back into, take your loss data, take your costs, and back in and go, hey, every time somebody cuts their hand, it's costing you $12,000. Do you think for $12,000 we can deploy a glove program or a whatever program? So when you start equating things to dollars and not just effort, because it goes back to employees. Nobody's got enough employees. But equate it back to dollars and cents. And then you can go, hey, this is what this costs you. I can't fix it, but we can mitigate it into the future. We can fix it into the future. I can't fix the past.
Right.
And so really it's trending analysis, it's understanding, what there is. And then even for great big companies that just have never seen a loss, and I call them the lucky ones. Well, I feel like every time I come across a lucky one, they are one day from a major accident, right?
Well, we've all been there.
And then OSHA has to show up. And so we go through with a lot of our carriers and do mock OSHA inspections and understand what would OSHA look at if they came in here right now, and what would it look like if you had a fatality on site. I've got a client that had a fatality last year, and ultimately they did not have any OSHA violations, no OSHA fines from that fatality. And you have to think about the effort required on their behalf to have unfortunately a young man die on their crew, and for OSHA to come out and find not one fault in what they did. Well, what they've done to be ready for that is we've deployed third-party risk managers. We have quarterly safety meetings, or they have weekly safety meetings. We do quarterly loss meetings with them. We've developed with them a safety committee where we go through all of the losses. We look at the things on site. We report back up to management that here's what the safety committee. So we've done a ton. They're in a high-risk world. We've done a ton to mitigate those losses, because when they happen, they're terrible. But OSHA found nothing wrong with what they did. And that's a big deal in our world to go, we had an accident. This is why we have insurance. This is the reason we have insurance.
So let me ask, and again, I'm going to put the hypothetical question hat on here. If I'm a growing company and I realize I'm working with you, I've made mistakes, but if I'm taking my analytics and working with you to correct them, is the effort on the correction and the increasing, taking down our losses.
Yeah.
If I'm with an existing carrier and they see that, will they want to stay with me because I'm getting better, or am I better to go to a new carrier?
Oh, that's a good question. So this is
because everyone wants to know that, Chris.
Yeah, no, this is a fundamental of how you've performed in the past.
Okay.
And what's your relationship with your broker, and what's their relationship with your carrier.
Okay.
So we believe, at Farmer Woods Group, and in my book specifically, we want to find you the right home and stack a ton of premium with them forever. So as long as they are appropriately priced, we want you to be with somebody for 4 or 5 years so that we can weather tough losses if we have them, and the carrier's going to stick by us.
Okay.
If you are a company that shops and moves their insurance every year for $1, they don't care about you like you don't care about them. You rented a piece of paper, they're going to pay their losses to the tune of the contract, and that's it. And so the effort that you're going to put in, if you're a freshly minted company and you had a bad loss, year 1, 2, or 3, and now what do we do?
Right.
Well, now you need to find a broker that you trust to go tell your story about how you're getting better and what you're going to do, and sit down with that carrier and go, listen, we want a long-term relationship. We're going to be great moving forward. We're no longer, we were unlucky. We're going to be really good moving forward.
Got it.
And we need your help in these areas. We've identified this trending. We've identified this risk. Here's what we're doing to overcome it. So it comes now down to trust between your carrier and you, and sticking by you and making the right decisions for the next 3 or 4 or 5 years. But again, it comes down to trust, that when somebody comes to me when they've had a bad loss and they go, Chris, I trust you to do the right thing. You need to trust me that I'm going to put you in a great home that's going to be the right home for the next 4 or 5 years.
So I think here's another, I'm just going to keep might as well hit you below the belt while I can. I think people also always want to know, Chris, come on, you're full of shit. You know, you guys as the brokers have no influence over the carrier. You're just a middleman. You're just, skimming off the top. Is that true? Is it false?
Yeah, we are for profit. I tell everybody that. Our company does exist for profit.
I meant more on the influence side.
No, I know. Yeah. Do we have a ton of influence? And I'll tell you that our relationships with our carriers matter a ton for hard risks. Easy risks, we probably don't. If you're I said this to somebody the other day, TCBY. You remember TCBY?
The yogurts, yeah.
Yeah, there hasn't been a TCBY shop, and it showed my age a little bit. But if you're a yogurt shop, everybody wants you. You're a great risk. Everybody goes, they don't ever burn down. That nothing ever happens at a yogurt shop. So I have no influence.
You're not really cutting off fingers because you're not processing meats.
I have no influence on how a carrier is going to react. I do have a ton of influence through our relationships with our regional carriers and with our national carriers, with the people that we're buying from. And so, I've got a tough sales job to get you to trust me to write your insurance business. I've got a real tough sales job to go tell an insurance company why they should take on your risk if you're a tough account. Just depends on who and what you are. But
touche. Yeah.
I think that we don't have binding authority.
No.
But I think we have a ton of influence on placement of tough risks if they've gone through a tough time. But we have to tell a really great story. And so I think there are often times where I can talk myself out of a job. I'll go meet with somebody and I will ask too many questions on the front end to try and just get to the root of what are we doing to be good? What are we doing to be great? And they go, well, my broker doesn't ask me any of these questions. I don't want to deal with all this. I don't have the bandwidth because I don't have enough people to do this job anyway. So get out of my office. Got it. And we'll lose those deals every time. Yeah. But we want to make sure we understand really, really well, what are we doing to be great? And how do I get an insurance company to be a good partner to us and pick resources? So we've got company A and company B, and company B is going to bring a ton of resources, but they're $1,000 more, $10,000 more, whatever. Now I can sit with you and go, hey, I want to utilize this stuff because I think it's going to make you better, but you have to write the check.
Right.
And so,
a good example is everything we just walked through.
Yeah.
If they're super proactive in a loss prevention program, it's easy for you to sit there and go, listen, for you to outsource that might be X amount per month. Look at, they're amortizing it over your premium. It's a take it. It's totally. A bonus. 100%. I mean, that's an easy one to pinpoint.
Really great way to put it. I think too,
go ahead.
We bring underwriters out to meet our clients, and these underwriters get stuck behind their desks. And so when I offer them a free lunch and a tour of a cool job site or a tour of a cool facility, they jump at it every time. And not enough people do it.
That's a good point.
It's such a cool thing for them to go, oh, I see what you're doing here, and humanizing this. We send in these pieces of paper with applications. There's no attachment to them. These underwriters get attached to their clients when we bring them out and let them see what they're insuring.
So on that, is it safe to say that if everyone would give a little bit more full Monty, even half Monty, that they would have probably a better deal long term?
Long term.
Not only financially, but think about the relationship.
100%. Yeah. The client that went through that fatality this year, we've been with the same carrier for 12 years with that client, and made a fatality, and the carrier stuck by him.
Yep.
But again, we picked our spot 12 years ago and said, this is our partner.
Yeah.
And they've been our partner every year. And when we've had any issues, we can get people in town quickly and solve things very, very rapidly because they know that this is a partnership, a long-term partnership.
Yeah, well stated. All right, let's go down another path. The overinsured and underinsured. So, and again, I'm just speaking from my gray hair experience, is I look at younger companies and younger CEOs and CFOs and looking at their lines, and what do you see as the lines that get, how am I going to say, forgotten, abused, whatever? And I'm just going to bring up someone's the pollution is one. Maybe professional liability might be another one where people aren't properly insured on PL or E&O.
Yeah.
I guess what I'm asking you is, can you condense it down to some consistent one or two or three things that you always see, that most contractors, whether they're general or trade, trade specific, where they're just missing the boat?
Yep. It comes down to high-level conversations with your broker and understanding your risk and understanding what risk you're willing to retain in-house.
Okay.
And so if we can identify that you have a pollution risk, we need to insure it, or you need to understand what the value of that risk is.
Right.
If it's one above ground storage tank in your yard that's got 100 gallons of fuel in it at the most at any given time, I'm not that worried about it. If you're running, truck and trailer over the road with 600 gallons of fuel, I'm worried about it, and I'm going to bring that to your attention.
There comes a time when dreams become a reality, when you see your vision materialize into a true work of art. And the only way to get there is to choose a general contractor who shares that same vision and knows how to bring it to life. At Blue Wave, we aren't so big that we've forgotten where we've come from, and we aren't so small that we can't care for your projects regardless of their size. When your vision deserves safety, perfection, timeliness, and expertise in order to become a reality, trust Blue Wave to get it done right the first time.
Because it's funny, and the reason I brought that up is because I've seen the other side of the story too. Mostly underinsured, like someone that has a pollution exposure that they didn't even know what that line meant. Yeah. But on the flip side, I've seen some where they walk in, I'm like, what the?
You're carrying $20 million in pollution.
Yeah,
what are you
doing?
Doing?
Yeah, what are you doing? And like, you've been overpaying this premium for a long time.
Yeah, it oftentimes is driven by one of our national,
yes, I agree.
One of our national builders that has decided by some guy in Chicago that, hey, we need $20 million in pollution coverage, or New York City, something, right? And it's like, hey, out here in the Southwest, we're not that worried about it.
Yeah.
We operate a little differently out here, so it's contractually driven a lot of the time.
Agreed.
But I think that in the world that we're in today, I see less general liability losses. I see more personal or professional liability losses than anything.
Agreed.
In the marketplace. And I think that every subcontractor needs to be paying attention to it. They need to be paying attention to the areas that are outside their direct focus, right? Mm-hmm. And it comes down to like the things that we don't know that we don't know. We didn't know we had an exposure for that, and let's try and like identify the things that are outside of that. And can we put a policy in place, or do you want to retain it? And if we can identify all of the areas, it's there's a lot of like what we would consider ancillary coverages. It's cyber insurance, it's EPLI insurance, it's professional liability, it's pollution, it's crime, employee theft, things like that. That you're just like, whoa.
Well, no, that's just where I wanted you to go. Cyber was good. Okay, because a lot of people are kind of, I don't need that. Okay, well, wait till you do, right? Wait till you have an event. Do you have any horror stories you can tell? Without mentioning names?
The largest cyber insurance carrier in the country was attacked, and it shut them down for 30 days.
Not the carrier.
We were doing renewals on napkins because their computers were shut down. So think about that. I mean, and nobody, I won't bring up the carrier's name, but don't. Nobody knows what the loss was because nobody knows. But I can tell you what it cost to shut down, a 5,000 person insurance carrier for 30 days is real money. So cyber is not a thing of if, it is when.
Okay.
You will be hit. You will be shut down. Something will happen. We are seeing more and more money theft where you've got social engineering and you're getting a fraudulent email from somebody and you're sending off a subcontractor's payment to the wrong place, or subcontractors, their email's been spoofed and you make a payment to a spoofed email. All those things, those are real today, right? And how do we combat them? And it really is through like insurance application and understanding what are you doing, and do you have dual factor authentication, and all of these things. And so we're managing those losses the best we can, but they're coming rapidly. We see them certainly not daily, but I would say monthly. We're seeing a loss that is meaningful and that is uncomfortable.
You mentioned something about crime too. What was that one?
Crime.
Is this like the intercompany crime?
It is.
Like employee to employee?
Employee theft of money and securities within the company, or it's outside crime. I mean, it is, and they used to be all lumped into one, and they've broken apart now to where cyber and crime are two different coverages now. But they were together for a long time. So, but if you're one guy in a backhoe and you get paid via check, and they come to your office, and you've probably got subs that come and pick up a check at your office because they don't want digital whatever, He probably doesn't have a big cyber footprint.
Right.
Most people do today.
Yeah, most people do.
And so the ancillary coverages they need to be budgeted for, and they need to be talked about, and you need to decide whether you're going to retain that risk or you're going to insure against it.
Like you said, are you going to, what is it, manage to get mitigated or pass it on?
Yeah. If we're going to mitigate it, how are we going to contractually mitigate this risk? We're going to risk manage the best we can around everything. Every good company is doing the best they can for risk management in their computers, in their people, in their everything. Yeah. But ultimately, there are things that we're going to retain, and can we buy insurance around it if we're going to retain that risk?
This one's a little bit, maybe a little bit too granular, and I've used that word too many times today, but I'll keep using it.
It's insurance.
Is the how often with your better clients are you reviewing every contract with them? Because I can't tell you how many times I find one or two words where the amount of time we spend on the legal review, but it's not even the attorney. It's more guys like you and groups like you. I'm like, hey, look this over.
Yeah.
Hey, that waiver of subrogation is wrong. Hey, this all those kind of things.
Yeah, so we've got a handful of places where we can dig in on that. So from an insurance contract perspective, we're reviewing your insurance contracts on an annual basis. That contract is issued once a year. We make sure that it was what we presented to you, and it's in place with what we identified as the risks that were presented to us. Okay. So we review that insurance contract once a year. From a subcontractor to general contractor. So if I represent the subcontractor and we get a contract from a GC, we're going to review the insurance portions and the indemnification portions and be sure that we meet the requirements of that policy.
Yeah, especially on the indemnity.
Yeah. We are not going to review the other contractual pieces of that. But
totally get it. Yeah, and I should have been more specific.
No, yeah.
And you hit the nail on the head. It's the insurance provisions, the indemnification provisions.
Yep. So we're going to review that. If it's we review them every time we're sent them from our clients. We are seeing a lot of our larger GCs and our larger subcontractors have an attorney that manages those contractual requirements and manages those reviews. The contracts have gotten lengthy and they're written backwards, and and again, attorneys have bolstered their jobs very, very well for years to come.
Listen, I agree, but I still think you bring all your players to the table. I mean, I'll let the audience know that that's what I do.
Yep.
It's both my attorney, but I provide it to our broker as well.
Absolutely.
And I love the teamwork because they don't have to go through me. It's like, we get on an open share like email about this, and then an open document and do it together. And to me, it's just like so much easier. It's like a relief type thing.
Yeah, you subscribe to advocacy, though, and you want everybody in your world, your accountant, your attorney, your insurance broker, to be your advocate.
Yeah.
Oftentimes, our relationship can be viewed as adversarial with the wrong clients, where they go, I don't want to call Chris because every time I call him, it costs me more money. Like, maybe it does. I don't know. But you're the one that's taking on these contracts,
you have to
not me.
You make the decision. Yeah, it's back to, again, everyone has to decide what's it worth on their risk exposure.
Absolutely. Yeah. Absolutely. What do you want to retain on your own? And if we don't see it, if we don't have line of sight to it, we can't help and we can't provide great data and we can't provide great options.
All right. We've got a little bit of time left. I'd be remiss if I didn't ask you, what are you guys, or what you gals, what are your biggest hurdles to overcome in the next year or two, as far as how you work in our space?
Yeah. So,
or challenges. What do you have in this?
The biggest challenges we're going to overcome is that the insurance industry as a whole has done I would say, a poor job of promoting how great a world this is and how great a job this is. And we get to be a part. I think I said it earlier. We get to be a really integral part of the right companies, and it's really, really fun to get to to see behind the curtain of companies that you never thought you'd get to understand them. We've done a bad job of promoting that to our younger people.
Okay.
And so I think one of our biggest hurdles is going to be people. It's going to be finding great people that want to be a part of this, that want to have a career in this industry for 20 years, 30 years.
Right, because no one goes and says, hey, my major at ASU is insurance.
Nobody. I haven't even told my kids I'm an insurance broker yet. I keep telling them I'm a contractor.
Hell, you haven't even told them you're your father.
Yeah, I keep telling them I'm a contractor. No.
Why did you think I asked you about the paternity test earlier?
Yeah. No, it's but I think that's going to be a tough one on us, right? And then from client acquisition side, the market is so volatile right now with the cost of insurance. It's going up.
Yeah.
You've recognized it. Everybody's recognized it. This is the new normal. I think that there's been lift in every other side. And so this is like the final straw for people. They're going, how could this be so much? Well, a gallon of milk's $4 and it costs $400 a foot to rebuild a house. How could it not be this much? And so we're fighting against a lot of that. And I don't see an end really outside of like great relationships and really great accounts. If you're a so-so account that has sort of terrible losses and doesn't do anything about it, you're going to feel pain. And if you're a really great account doing everything you can to manage your risk, you're going to be in a really, really good spot. And so we're going to see.
Yeah. So I think the analogy, I think what you're trying to say is, if you're really good, your rates will be commensurate with a lower inflationary rate.
Yep.
If you're below that, then play the market.
Yeah. Yeah.
And if you're below that, tough shit.
Good
Figure
luck.
it out.
Yeah. What Jim Farmer always says, you don't need help. You need. I apologize. Yeah, but it's
all good.
Saying. Yeah.
All right. Any other parting words or words of advice you'd like to share with the audience, at least specific to you, your firm, the industry?
Yeah. Make sure you're working with somebody that you trust. I mean, it all comes back down to us that we are in the trust business, and make sure that your broker, the person that you are working with, is comfortable having. I go back to that courageous conversations. Mm-hmm. Make sure that they're comfortable having those with you. And I've got clients that I have to go tell bad news to a lot. Mm-hmm. Guess what? You'd rather have bad news now. Tomorrow, it's just another day later. So if we have to deliver bad news, we deliver it early, we deliver it often, but we do it out of, hey, here's what we're doing to overcome these things. And make sure you like the person that you're working with, so that if you ever have to call them on your worst day, that they're the ones that you want to talk to.
They'll answer the phone. Yeah,
totally.
Oh, great advice. Thanks again. For those of you that want to get a hold of him, I know he's accessible. Chris Duncan, Farmer Woods Group. And for those of you that spy him on LinkedIn, he has updated his 16-year-old picture to the appropriate age group now, so you guys don't have to worry about shopping the pootie. So thanks again for coming on today, Chris.
JJ, thank you.
Glad to have you.
Yes, sir.
You've been listening to the Mac and Blue Show, brought to you by Blue Wave General Contracting. Be sure to subscribe to the Mac and Blue podcast on your favorite podcast platform. Follow JJ Levinsky on LinkedIn and Instagram. Tune in every Monday